But we've got another corporate waiting by to chat with us, that of L&T Technology. Now, Q2 numbers were in line with street expectations, a constant currency revenue growth of 4.5%, margins largely resilient, flat sequentially despite the wage hike impact. But the stock has come under a bit of profit booking. We're joined by the MD and CEO, Amit Chadha, on the show now. Amit, morning, and thanks so much for joining in. First, if you could talk about your FY23 guidance. At the lower end, you've raised the guidance. Can you talk about the demand, the outlook, and what is it that you're seeing in the environment right now?
Sure. So let me first start, if I may, to step back and thank all our viewers, our stakeholders, congratulate them that we finally delivered $1 billion of run rate in constant currency, which is the first for any engineering, pure play engineering, India headquartered company, right? It's a milestone for us. We're really proud of it. We're thankful to all our stakeholders for it. We had told you last year in Q2 that we would get to it this year in Q2 or Q3, and we've done it in Q2. So that's for us is a big thing for us. Moving on to our guidance. So we switched to constant currency guidance given the volatility of the dollar and other currencies last quarter. So last quarter we had come in and provided a guidance of 14.5 to 16.5 in constant currency. This quarter we've actually in a way upped the lower end and brought it up to 15.5 to 16.5 at this stage. But we're not done with the year yet. So as we progress forward and things change, we will continue to keep you updated. If I then talk about the market, right? So there are three broad things that are happening in the market today, in addition to whatever else you're reading. One, there is a energy transition happening in the world. So when you look at electric vehicles coming on the road, two-wheelers, four-wheelers, trucks, buses, hybrid vehicles, etc. Second, energy sources being swapped out and swapped in plants and factories. In Europe especially, they are trying to do away as soon as they can with gas-fired, moving to oil-fired and other sources. In the US, they are moving to more green energy, if I may. Both of these things. And third is that there is a reality in the developed economy and the developed world that the number of workers in the workplace has gone down, right? And with those three things that are happening, and four is that there is localization of supply chain that is happening in a big way. Every country is trying to get self-sufficient with grain production, food production, basic amenities, etc. So with these trends that we see in the market today, it is having a positive impact, if I may, on the transportation segment. It's having a positive impact on the digital manufacturing or the industrial products and process manufacturing segment. So those are fairly positive as I see it right now. High tech, there's a little bit of caution, and medical forever has been conservative, and that's how they will be. And this is reflected in our results as well. If you look at it in transportation, we grew yet again at about 9+% in constant currency. We grew plant engineering at about 6% plus in constant currency, and industrial grew more than 4% in constant currency. So I do feel fairly confident as we stand today, though cautious, right? And we continue to watch the developing economy.
All right, confident but cautious. Mr. Chadha, thanks for joining us. You spoke about also being cautious about the high-tech space. So could you elaborate on that as well as telecom, since you club both of them, and also what's happening in the medical devices space, because that sector has also been quite subdued this quarter. So if you could take us through what is the problem with these individual areas?
So if I look at high tech, and we say telecom and high tech, there's actually 6 sub-segments as we call them out. So there is semiconductors, there's media entertainment, there's operators, infra, consumer electronics, and ISV companies, right? We do see that in consumer electronics as well as in independent software vendors, there is a kind of a relook at whatever they are spending just to make sure that they have a paying customer at the end of the line for them. So we are seeing that caution from them, and I said this last quarter as well. So it's been going on for the last 3-4 months. We're seeing that happen. We think that it will start easing in the new year as we move forward. Now, the 5G rollout from telecom operators has not yet come in full force to people like us. I think the spend to us will take a couple, 3 quarters for us to start really seeing the benefits of that. Having said that, there is a technology refresh that continues to happen. Chips are getting smaller. They're getting a lot more efficient, a lot more faster. So I do believe that at some point, this will start picking up again. If I was to move to medical devices and telecom and healthcare, the medical sector is a very regulated sector from an FDA standpoint, and therefore it does take its time to make decisions and move forward. So that's broadly where we're seeing it.
Okay, morning, Mr. Chadha. You've indicated that Q3 will be subdued. Is this just normal seasonality, or is there more caution given the current environment?
So I do believe that Q3, we're talking about a subdued Q3 because we do believe that, so if you look at the quarter, this time you had Dussehra, you have Diwali, you got Thanksgiving, New Year, Christmas, all of it in the same quarter. Generally, Dussehra would come in Q2 and you would have Diwali in Q3. This time everybody decided to go on vacation at the same time. So I do believe that that Q3 will be slightly subdued. We'll see regular furloughs. Q4 we are back on is how we see it right now. That is not to say that we won't grow in Q3. What I'm saying is it will be subdued. Now, how subdued, how unsubdued is the quarter in progress.